I think we can go ahead and get started, ladies and gentlemen. So we can get started then. Welcome, ladies and gentlemen. I'm very pleased to be able to welcome you to the conference where we can recap PKP Cargo Group's 2018 financial results. I head up the Investor Relations and Marketing Department. It's my pleasure to present to you the management team. We have Mr. Czesław Warsowicz, who is the CEO of PKP Cargo. Then we have Mr. Leszek Borowiec, who's our CFO. We have Mr. Grzegorz Fingas, who's responsible for commercial issues. Then we have Mr. Witold Bawor, who's our COO. And we also have Mr. Zenko Zander, who's a representative of the Employee Affairs. I'd like to encourage you to be in contact with our press spokesman, Mr. Krzysztof Losz. And after the conference, we'll have the opportunity to talk with one another directly. We'll have some refreshments. And so I'll ask now the CEO to take over the presentation. Thank you very much. I'd like to welcome you all very cordially to our annual conference. I recognize most of your faces, so it's almost as if we're meeting again now in a group of friends. I'm very pleased with this. This is a conference to recap 2018. And before I move on to the presentation itself, I'd like to say a few words in general about last year, what we managed to do, perhaps what we didn't manage to do, what awaits us. And so I'd like to tell you at the very outset that my objective, the objective of the management team as well as the company, is to grow the shareholder value of the company. That's why we're here, and this is what we're trying to do to the best of our abilities. And it seems to me that we've been able to do so, especially when we look at 2018. And so the milestone which we were focusing on and the strength of the company was the acceptance of the strategy and the adoption for the period from 2018 to 2036. And I promised at the first conference that I attended last year that the strategy document is a key document which integrates the organization, it shows the objectives, and it shows its strength. And so it's with all the more pleasure that I'm able to communicate to you that we've been able to deliver on our promise. It's needed in order to build the strength of the organization in the upcoming periods for you and for our shareholders and the company overall. And so we've raised the standards of transparency and openness, and above all, we've improved the communication with all of the stakeholders, so with yourselves as well as all of the other stakeholders of the company. And I think this is a result. If we look at the internal workings of the company, this is a result of implementing a new corporate culture to ensure that we have harmonious development within the group and to ensure that it's fully integrated on a business footing. And I can tell you this is something that we've been able to achieve. And I've always emphasized that the value is in the group and not in an individual company. So I believe that our group is working like a well-oiled machine, like, if I could say, perhaps even in a Swiss watch, that the workings are that good. And this has created a lot of value for us, for the organization. And this is something that we've been able to achieve in the most recent year. In our strategy, we have focused on expansion, international expansion. This is something that we've written into the strategy, and I believe that through this accent where we show and demonstrate our strength, we had the determination to buy a transport company, Prima Rail, in December of 2018. Our strategy also has a lot of emphasis placed on innovation. And perhaps the last but not the least important is that we were able to achieve these results as a result of having better aligned our offer to the demands of the market, to a highly demanding group of customers. Customers are at the center of our attention. We changed because this is what our customers wanted. We wanted to prepare the service as best as possible. And of course, this was beneficial to ourselves because we were able to earn a profit doing so. And it's also advantageous to our customers. And that's why we've been involved in organizational activities, investment activities. All of them were focused on achieving that goal. And so I think we can say that as a result of the outcomes we've been able to achieve, we as a management team have recommended a dividend payment to the shareholders. And the recommendation is 1.5 zlotys per share, and the supervisory board gave a positive opinion to our motion. And so it will be delivered to the shareholder meeting to adopt a decision. This is something we've managed to do. I said also there's some things that we didn't manage to do, maybe not a lot, but there's at least one thing we did manage to do. We could have done more transport. We could have had a higher market share, but because we had a shortage of certain resources and the structures weren't fully aligned, we weren't able to do that. And so I have a certain amount of feeling of not being entirely satiated. We would have had a better result had we had more resources. And so I think there's a lot of some sort of, we don't feel fully satiated. And so I think we're going to turn this weakness into a strength in the upcoming years. So if we come on to some of the individual results, or just the results themselves, and the core elements of our business, what I'd like to do is make a succinct presentation, and then we'll be at your disposal to field any questions you may have. I see that it's not working. I'd like to move to the next slide. Just a moment. So perhaps I'll begin. Oh, there it is. So here we see a slide that summarizes everything, and we'll drill down a bit later. If we look at our revenues, we came in at 5.2 billion zlotys, so some 11% above last year's result. On subsequent slides, we'll see that this was the best, or the highest level of revenue we've seen since we've gone public, and so we're in excess of 5 billion zlotys. If we look at our EBITDA, we came in at 907 million zlotys, so we're up 17%, and this is something that I promised you as well. We were forecasting that last year we would be able to close with an EBITDA of around 905 million zloty. That's all the more reason for me to be satisfied that the deviation from the forecast is quite minimal. Of course, it's always better to be a little bit above than a bit below, and so we're 2 million above the forecasted or projected level. And so our financial people, everybody else, as they prepared these forecasts, are quite pleased. So the net result was 184 million zlotys. This is the net profit, and so our profitability came in at 3.5%. And so you've seen this in our press release. You also see an impairment or a revaluation of AWT in our ledgers, so I want to present as much information to you as much as possible before we come on to the Q&A session, and then we can give some more precision later during the questions and answer session. So now, if we look now at the freight, so basically the turnover or freight volume, and so as a group we came in at 121.9 million tons, so 2.3% more than the previous year. And this is the largest quantity of freight mass that we've had since we went public. So we have two categories here. If we look at coal, it was quite stable, having in mind that this market is relatively stable. If we look at the volume, the amount of supply that needs to be transported. If we look at aggregates, it's up by some 17%. And so we transported some 26 million tons. This is of aggregates and construction materials. This is in line with the expectations of this industry. And this is not yet the peak on this market. As we participate in it, we talk with contractors. We believe that the peak is forecasted to take place between 2019 and 2021. So in fact, we're still in front of the peak. And so we can say it might be difficult to continue seeing double-digit growth figures, but at the same time, we believe that there's not much risk to this figure persisting over time. And so in this product group at the Polish market, it seems to us that this is a very positive area of the market. If we look at intermodal transportation, we can say this is part of our core business, our specialization that we see under this strategy. It's part of our mission statement, part of our vision. We've made organizational changes for intermodal transport to be one of the key elements of our specialization, our focus on core business in upcoming years. So we want to be a partner as a logistics partner and focus on intermodal transport on a door-to-door basis as we offer our customers new products and services. And so we want to have our entities ourselves specialized in this, and we want to invest in that. As you can see from this data, we have nearly 10 million tons in intermodal freight that's been transported. And this really affirms that we chose the right strategy and have created a lot of value in the long term. So, of course, in the short term, we can say that transport of aggregates will continue to grow by quite dynamically, several percentage points. But in the long term, we believe that intermodal transport and being a logistics partner will be one of the key areas where we can be a logistics partner and earn more and be a real partner on the core transport routes and transport corridors, so the north-south as well as the east-west corridors along the New Silk Road. If we look at the financial results, as I've told you previously, this is a recap, 5.2 billion euros, so we're up 11% over last year. And so since we went public, we've exceeded quite substantially the watermark of 5 billion zlotys. The EBITDA result in term is in line with what we targeted and projected, which is 907 million, so it's up some 30%. It's nearly double what we delivered in 2016. We distributed a press release that this year in 2019 we anticipate that we'll do 1.135 billion zlotys, and so on a comparable basis, it'll be 1.035 billion, and so we want to exceed the magic threshold of 1 billion in EBITDA. So if the market's going to grow strongly, and if possible, for us to do more and fight for more in terms of intermodal transport as well as more freight volume, we believe that these figures won't be threatened at all. If we look at the net results, they were the best since we've gone public. Compared to previous years, we've seen some pretty substantial improvement. So we can say that the net margin came in at 3.5%, In our strategy, we would like to achieve a 5% watermark. This is still a challenge, but 3.5% is a very good prognostic in terms of us moving in the direction of our goal of reaching 5%, which is something we'd like to achieve by 2023. Here you can see that our costs are under control. Cost grew by 8.3%. We have a lot more in depreciation, and this is a matter of some of the things that we've already signaled, the impairment tests that we've done. We also have a revaluation of AWT, and so we believe that less will happen here, having in mind this one-off which took place in 2018. So if we compare this to the standalone figures, it's worthwhile to have in mind where we've built our profitability. It's in cost efficiency, so our revenues grew by, on a standalone basis, by 9.3%, while costs only grew by 7%. So we're improving our operational excellence, and so that drives our profitability. We're above substantially where we were in previous years. So having a strict cost control regime is something that helps us. And as we have a rational cost approach, this means that we're able to improve our profitability, generating higher profits. On top of profits, cash is one of the most important things. You can't live without cash, and the cash is king, as some say. And these flows demonstrate that we're generating a lot of free cash flow. Our operational cash flow and investment cash flow showed that we have generated a positive figure of cash, more than 250 million zlotys, 251 million zlotys, compared to negative cash flow in 2017. Where we were roughly 140 million, in the red. And so you can say that we came close to 500 million improvement in cash flow. This was part of the hard work we've been doing for you as investors, because free cash flow also generates funds that we can also utilize to pay dividends, that we can fund our growth and change our position. This is one of the areas where we're going to focus, and so the generation of free cash flow, and we want to do this in a safe way. So if we compare this to our fixed capital and the long-term assets we hold, so it's good for our long-term assets to be financed with fixed capital at a good level, and thinking about a very stable entity which is capable of generating a large amount of free cash flow. If we look at our investments were in line with the freight we did. Of course, we're down a little bit because we weren't driven by spending money in order to perform a budget. We were looking at what the market needs and what our ability was to actually provide those freight services. We were up by some 60% in terms of the capex, but on a net basis, more than 200. So basically, we wanted to improve our capacity to do more freight services, and we want to maximize our capacities here. I can say with a lot of satisfaction that our rolling stock was fully used last year. As I mentioned previously, had we had more rolling stock, we would have had even better results, both financially, and the dividend would have been even higher, because then we would be able to share even more profits with our shareholders. So we can say this year, 2019, when we look at investments, we will look at our investments from the standpoint of our ability to earn money on them, and not only whether or not we've spent money. So the overarching objective we have is the financial result, and the result at all levels should be profitable. We should be profitable at all levels, and so the EBITDA should be the starting point for all that. So now maybe a few words to sum up the outcomes we've achieved, and then coming on to the current year and what we anticipate happening in the upcoming years. As I mentioned to you previously, the basis of the stability for the company is the strategy, which says what we'd like to achieve, where we're going, and what sort of methods and resources we'd like to utilize to do that. Even so, a bigger player can do more, but even so, implementation, execution is quite important. So we're in the process of executing this strategy. We've adapted the internal structure. We're changing because we treat quite seriously this document. We're implementing it, rolling it out, and that's why we're also changing, because this should, in fact, make it easier for us to achieve the intended economic results. I won't focus on the individual elements right now. So I mentioned, of course, the transportation corridors being quite important to us, profitability, cost effectiveness, and as you can see, we're placing a lot of emphasis on growing the share price and the satisfaction of our shareholders. And this is a steadfast matter, or a matter of steadfastly executing our policy. And we want to follow, of course, the dividend policy here as well. And so we would pay a dividend of 35% to 50% of our net profit. This is something we'd like to do now and in subsequent years. And if we look responsibly at the capacity of the market to grow and the situation as such, we've proposed a dividend which is in excess of 36% of the net profit for 2018. These are several investments and plans that are underway and we have planned. And as we want to specialize, of course, in intermodal transport, we've already informed you yesterday in a press release that we've signed an agreement to have co-funding for the purchase of flat wagons as well as locomotives. And we're talking about some nearly 300 million zlotys. This is linked to the major element of the strategy and its mission that we're intending to implement. We've conveyed that information to you, and we've proven and shown you through our results on transportation, through intermodal activity. Now, if we look at the prospects for 2019, I'll say a few words because I've given a description that, well, the coal business is quite stable, perhaps with a little bit of upward growth. So if we look at the size, the quantity, we can think quite calmly about that. Aggregates, we're still on our way up the slope towards the peak. And there's good opportunities for further growth. And so basically we will align ourselves to what the market's able to give us. And then we have the metals and ores. We'll continue to grow here dynamically and we'll change and evolve as the market requires, and we want to pick up more market share, both domestically and internationally. So in upcoming years, we want to go even more internationally. There's a value here in the intermodal transport in order to combine ports across Europe. And that's why we're entering into agreements and contracts, and the internal organization is adapting to that. Here's just a couple words of commentary about what we've communicated to you already and what we've achieved. As I mentioned, if we look at EBITDA as well as the freight volume, this is very much in line with the information we conveyed to you. If we look at market share, we're down by 1.2 percentage points below what we had said. Of course, the thing was that we didn't want to achieve at all costs a specific market share. In fact, we wanted to earn as much money as possible. And that's why we want to organize our efforts in such a way to ensure that we're able to generate that profit, and EBITDA is the key thing. And here we're giving you the levels of EBITDA that we'd like to achieve this year. And of course, we want to state that in a comparable manner, because we have IAS 60 means that we're going to have, for 36, we're going to have a higher level of EBITDA. But basically, if we use comparable basis, it would be 1,035 million. So that would be the comparable figure for this year and last year. So roughly 130 millions up. And this is, I hope, the minimum that we'd like to achieve. That would be more or less it in terms of the results that we've delivered. I'd like to say just a couple more words. This is what I've promised you, and I think you should hear this information. I don't want to have any shortage of commentary or any sort of misleading statements to be made in terms of the impairment loss to a key asset, AWT, located in Czech Republic, as a result of the impairment test that we've done. Let me share with you some words about that subject. So if we look this year, we did an impairment test. You are perfectly well aware of that. Basically, this is sort of evaluation of the company utilizing the DCF method and income method under IAS 36. And so we've done a very rigorous valuation, because IAS 36 addresses the issue what sort of key elements should be incorporated in a forecast on the basis of an acceptable forecast for the upcoming years. And we have a 3-year forecast. All the rest of the period is based on an extrapolation, looking at the market situation, the country, as well as looking at the wording of IAS 36. We also have in mind the discount rates, which have also been defined. And so after having run some projections, in fact, financial projections, which talk about our ability to generate cash in the forecast period and afterwards, so the residual value, and looking at what we have generated last year under IAS 36, then we prepared, as a company, a valuation of AWT, and we arrived at the value of the valuation, and it was lower by some 51 million from what we had in the consolidated report. You know this as financial people very well, so we incorporated that impairment loss there. And as I mentioned, we've done some reorganization last year in AWT. Last year, starting with the full replacement of the management board of the company, we've reorganized internally, and we've flattened the structure. We've optimized it in terms of costs and organization, and also we've realigned it to some of the industries. We've redefined some of the products provided by that company, and there's greater percentage of intermodal transport being done by the company, and we're not focusing as much on coal transports for OKD. And so that means the results are improving. And starting in 2019, we assume that will generate a profit at every single level. As you can see, if you look at net profit, AWT has not generated in its 8-year history since 2010. And so this is the main reason we have prepared a revaluation. We've remeasured it, and we've done that impairment test. And I just wanted to illustrate that on the basis of historical figures, what we were dealing with, and this was the grounds, if you will, for us to forecast our plans for upcoming years and to extrapolate further into the future according to IAS 36. That would be it from my side. in terms of summing up 2018 and the major accomplishments, effects. And so the future is the most important to us, not the past. And so we look at the market with a lot of optimism. And we have a lot of determination in order to achieve these forecasts. There's a lot of hope on the market because in Poland, in upcoming years, we can say that we're going to be a very positive market for several years. And of course, one of the things that's of a great boon is the development of the economy. And of course, we have the links between commodity transports, cargo transports, and the growth of the economy. And this has been confirmed by empirical evidence in the form of research. And so if last year the economy grew by 5%, this year it should be around 4% and beyond, and that's quite a bit. So this suggests that there's a lot of stability that we see in the development and the growth of cargo transport because the overall economy is expanding. And this will also go over into intermodal transport. And we can say that the future is as good as the past last year and perhaps even better. And so that would be it from my side. And I'd go ahead and invite you at this time to pose any questions you may like to ask. So I would now encourage you to ask any questions you may have to the CEO. I'm from Postilion. In reference to slide number 11 in the forecast you've presented, what are your major assumptions for employee benefits, utilization of energy, consumption of energy that you've utilized in order to calculate the forecasted EBITDA for this year? What are the major components? Perhaps I'll begin with the things that could improve. We have energy, the question here, because the cost of energy, having in mind the regulation on energy prices, power prices, and what the government is doing here, well, this is something that will clearly act as a benefit to us, and so the costs will be lower than the forecast costs. We're not able at this point in time to say the specific quantum. I mean, of course, we're making estimates, but once the regulation is ultimately embraced, well, we can talk about that. There's a lot of potential here to reduce that figure this year and also to counteract the effects of the first 2 months. And if we look at the employee benefits, payroll, and other services, infrastructure access charges, they're going to be lower on a unit basis, but they'll be higher because of doing more work, handling more cargo. We're in the middle of dialogue with the trade unions. So last year we didn't have any tensions and there were no surprises whatsoever in terms of implementing the pilot program on the bonus system. So it's kind of a motivation system, incentive system. This is something that's generating benefits, and we can see that employee productivity is on the rise. If we look at the amount of cargo we'd like to transport and what we've done up until now, compared to now, we have to have resources in order to be able to do the cargo work. The same is true about people. You have to have people who can do that. So we see a lot of opportunity to improve our productivity. If we look at the ability to onboard qualified staff in various groups, not just train drivers, but also specialists, people who are responsible for doing maneuvering. There's a lot of needs here. We're working on a system to be able to bring in more people, perhaps to learn a little bit more. but we want to make sure that they're working more effectively. And at the end of the day, this is something that should reduce the unit cost per trade or per freight volume. So to sum up, if we look at costs, just as this year, costs were under strict control. And on a unit base, we can say they grew to a much lesser extent than the costs, so than the revenues, I should have said, of transport services. So again, this year, I'm confident that we'll be able to preserve that relationship. And the difference to the benefit of revenue was 2.3%. So we can say that we want to even expand the mass of profit to the benefit of our shareholders. So we can expect that our margins will actually expand. You've not given revenues. Of course, yes. We're not showing revenues. Because we want to be guided by profitability in our results. One of the goals we have in the strategy, because we treat every document quite seriously we present, we adopt, we would like to have a margin, a net margin of 5% by 2023. Now we're at 3.5%. And so, of course, we do see an opportunity, and we would like for the expansion to take place both in terms of freight volume as well as freight turnover. Thank you very much. My second question is about the CapEx. On slide 17, you show the distribution of investments to rolling stock. What sort of investments do you have in mind, and how will they be distributed in nominal terms without considering the EU funds, but I'm thinking about your own funds? I've already said a little bit during the course of the presentation. CapEx is a tool to achieve an objective. Our objective is profitability through EBITDA, and so that's not our objective. In 2018, CapEx was aligned to our ability to deliver freight services and generate profits. And this is one of the reasons I think Leszek can say that we've opened up a committee, an investment committee, which evaluates every project in the group under a strict financial approach. And every project has to meet these criteria. And that's why the quantum of CapEx, I want to emphasize quite strongly, will be aligned to the needs defined by the market. And we'll take a flexible approach depending on the needs the market has and the capacities that we have in order to provide those services. And so the EU funding is quite beneficial, because we can say, it's a little bit trivial, but we could say that we're making these purchases for next to nothing. And so this is something that is aligned to the very strongly growing intermodal transport segment. On top of that, it's really a strong part of our strategy we adopted last year, and this is something that we communicated to you. And so third, this is a very profitable product that we've been offering, and it generates a very high rate of return on the invested capital. Let me remind you that our intermodal transport in the company grew by 21.4%. And so this is a growth rate that we'd like to continue. So the acquisition or the purchases we're talking about have been confirmed by the market needs and the growth of the market, the expansion of the market. And so we have those two corridors where we've talked about in our mission statement. We want to be the leader here. And so the growth is quite impressive. And that's why we have planned to make these purchases, which are in line with the needs and requirements of the market. If we look at other investments, we're going to be quite flexible and basically match what we're doing to what the market offers us. One other question about CapEx. You said that you spent 895 million zlotys in the cash flow is 725. Is there a difference between long-term and short-term? My questions is about, the investment commitments you have. If you look at the short term, when will the payments be made? And if we look at the long term, could you give a little more clarity? Which slide do you have in mind? I've combined several slides. Perhaps we could go through this behind the scenes. I'd like to be able to respond precisely, but I wouldn't want to mix anything up. Perhaps in one sense, well, there is some shifting, but this is, as you've observed, a large portion of our CapEx is in Q4, and so the payments will be made in Q1. And as of the balance sheet date, we have the parameters just like what you said. Of course, we're available after the conference to talk to you. If somebody wants to talk about certain things in detail, we're at your disposal after this meeting, and we'll invite you to participate in some small refreshments. But if you have any other questions, I didn't want to end the meeting right now, but I'm not sure if does your forecast incorporate this regulation? It doesn't incorporate the regulation of the government. Okay. You also talked about international expansion. This is something that was discussed during your speech, and you talked about international acquisitions. One was bigger, one potentially was bigger. Could you say a few words about what you have in mind here? How far along are you on the road to doing that? We're talking about acquiring Slovenia carrier Primoreo, which should enable us to intensify quite strongly our freight transport from a port in Koprze. And so it's a small entity, but it would enable us to expand. We're not talking about the size of the acquisition. We're talking about the potential size that we can create. And so we're penetrating these markets. Right now we're looking at those entities, and we'll communicate to you on that subject. We are interested in acquisitions. As you know, these are time-consuming things, and we have to show some delicacy. And so we can say and confirm that we see organic growth opportunities, but also through M&A. We want to do this in a rational basis. And just like with our CapEx, we don't want to overpay for things, and we want to make sure that we have a guaranteed rate of return, rate of ROE on our capital. So we want to make sure that we're generating profits, and we want to have safety in our investments. And so we're analyzing things, and we're traveling, we're looking, and so we'll communicate to you on that subject. I have one more question. In terms of your objectives, the market share objectives, is it possible for you to do any type of acquisitions in Poland? Yes. That's it from my side. So you're experts. You speak, and we speak quickly, succinctly. I'm very pleased that we've been able to walk through this so quickly. We're at your disposal, so I invite you to join us for some refreshments at this time. Thank you.